Hello traders, The title of this video is Practical Use of Elliott Wave and Predictive Fractal Patterns. Let's get started. This is an essential tutorial that will take up to 30 minutes. I'll try to keep it within 30 minutes, even less, all right, to share with you a practical use of Elliott Wave and Predictive Fractal Pattern, all right, as a technical trader. All right, so you are a technical trader that wants to combine the Elliott Wave principle, Elliott Wave theory, and the predictive fractal pattern. All right, you have also watched the videos, this particular video here, how to combine fractal and the wave principle at www.24elliottwaves.com. You have also watched the video that are titled Elliott Wave Trader Explain the First Elliott Wave from the viewpoint of fractal, and you want to know more, and you did watch also the second video that we call Mastering the Second Elliott Wave, like a predictive fractal pattern trader, and you still want to know more, and you go to www.dprotrade.com and you click on predictive fractal pattern because you are very passionate about the predictive fractal pattern, but you are also an Elliott Wave trader that wants to use the Elliott Wave theory, combine the Elliott Wave theory with the predictive fractal pattern of Mr. Benoit Mandelbrot. This is Mr. Benoit Mandelbrot here. There is a video from TED called Fractal and the Art of Roughness. All right, let's go back to the main topic because I am very, very passionate about Mr. Benoit Mandelbrot and the predictive fractal pattern. Talking about practical use of Elliott Wave and predictive fractal pattern as a technical trader. What do we have to do practically speaking? All right? All right? So, how is it done? How do you go? What's the correct step that you need to follow? All right? You need to understand one thing first. The Elliott Wave trend, which we also call the multi-wave, and what we call the Elliott Wave cycle, which is the multi-wave plus the correction. You need to grasp that very well. There is a video about Elliott Wave cycle by 24 Elliott Wave YouTube channel. Check it out so you may understand the Elliott Wave cycle. Practically speaking, if we understand, choosing my word carefully, if you understand predictive fractal pattern, and now we want to combine it with the Elliott Wave principle, we need to go and look for Elliott Wave trend and Elliott Wave cycle on specific time frame as a technical trader. The first time frame that one must check is either the 3-minute time frame or the 5-minute time frame. I know that a lot of very, very experienced traders will hate me for saying this, but I'm somebody who like to share tips and tricks for free at 24 Elliott Waves YouTube channel. All right, free speech. All right, free speech. You go to the 3-minute time frame or the 5-minute time frame. You are looking for an Elliott Wave trend or an Elliott Wave cycle. If you see one, either a trend or an Elliott Wave cycle, 1, 2, 3, 4, 5 wave, clear-cut multi-wave, or 1, 2, 3, 4, 5 plus a correction, an Elliott Wave cycle on the 3-minute time frame. Take a picture of it. That Elliott Wave cycle, that Elliott Wave trend. Take a snapshot of those cycles on the 3-minute time frame or 5-minute time frame. Save them on your desktop and analyze them. Use those Elliott Wave trend or cycle, the structure. the predictive fractal pattern of those Elliott wave trend or cycle on a 3-minute time frame, save them, and use them practically speaking. That's why I refer you to previous video and web pages that you must change, because if you already understand the predictive fractal pattern, now you are an Elliott wave trader that want to combine the Elliott wave principle and the predictive fractal pattern on the 3-minute time frame or 5-minute time frame, because some traders do not have 3-minute time frame, they only have 5-minute time frame, either 3-minute or 5-minute time frame. Take a snapshot of those cycle or trend. I'm going to the 3-minute time frame for this stock. If I see, does it look like a trend here or a 3-minute time frame? A double bottom. This structure doesn't look like an impulse wave, so I'll take it from here. Okay, 1, 2, 3, 4, 5. 1, 2, 3, and then a bit of bounce. This is the third wave. Something like that, okay? Either 3 minutes or 5 minutes. So whenever you see a trend or a cycle on a 3-minute time frame, you can just save it, all right? Or remember it. If you can't save it, remember it. Or draw it yourself and see something like this. So what you are doing, you are looking at the structure of the trend or the cycle. So here you see first minor wave. What is the retracement of the second minor wave in relation to the first wave? What is the structure of the second wave? What's the structure of the first minor wave? And so on. I don't want the video to be too long, and so on. So because the structure, that's what you're going to pay attention to. So you take a picture or a snapshot of that video or that trend or cycle, and you save it. Okay. Now, what are you going to do? You're going to go to the hourly time frame. The structure, the trend, or the cycle that you see on the 3-minute or 5-minute time frame may copy itself and paste it itself on the hourly time frame. Sometimes that trend or that that trend or that cycle, Elliott wave cycle that you see on the 3-minute or 5-minute time frame may copy itself or may expand itself even up to the daily chart or monthly chart or yearly chart. So what you are doing, you are trying to focus the market, you are trying to focus a higher time frame multi-wave, a higher time frame Elliott wave cycle using the multi-wave and the Elliott wave cycle that you have identified on a 3-minute or 5-minute time frame. Can you do that? It's a bit of hard work for some traders. It requires a lot of attention to details, attention to structure, the form, the shape, the Fibonacci extension, the Fibonacci retracement, the pattern that is in place, and that's why you are paying attention to how fast the price went down, how deep it was, and so on. Those are the things you are paying attention to in order to use that predictive fractal pattern of the structure of the motif or Elliott wave cycle of the 3 or 5-minute time frame. All right? That's one stage. That's one stage. There are more to this. As I promised you, I don't want the video to be too long, but I'm giving it to you. I may call this video the first step for practical use. In fact, I will call it first step. So that's the first step, to a practical use of Elliott wave and predictive fractal pattern as a technical trader. You are trying to focus the market with what has happened before, either on the 3-minute or the 5-minute time frame as an Elliott wave trader. You are using the predictive price structure of the motif and the Elliott wave cycle of the 3 or 5-minute time frame to focus the motif or Elliott wave cycle either of the hourly time frame, daily chart, monthly chart, or yearly chart. All right. Now, what I'm trying to do here, I'm trying to help traders to understand, to know what we can do. So, we know that, all right, during the financial crisis, all right, 2008, it's a big event, yes or no? So, we can say it's a dominant force, isn't it? Okay, it's a dominant pattern. All right. During that time, if you go on the high street, as we call it in London here, the high street, we have many shops. A lot of shops has disappeared because of the financial crisis. It's a pattern that was in place, okay, from 2007, in fact, up to 2009. Many business were out of business. All right. Financial institutions were out of business. It's a pattern. That pattern has a structure. All right. It was duplicating itself at all levels, different levels. So, what is happening, if you allow me to say, is that in the financial market, there is a dominant force. There's somebody, boom, a big boom, all right? And then a pattern appears. A market sentiment is in place. Either it's bullish, very, very bullish, or it's very, very bearish, or it's mildly, or it's neither bullish or bearish, which means we have a balanced market. It's a structure that is in place. But that structure that you see on your chart, that motivate price structure, that predictive fractal pattern that you see on the 3 minute, 5 minutes, is the reflection of that dominant force. All right? Something is taking place. And on your 3 minute or 5 minute frame, you see the structure telling you the first sign. That's the first communication or the first email. You remember I said to TSTW traders that the first email that you receive is very important because I tell you everything that you need to understand before you even start. The first pattern is in place. So therefore, if you want to use the predictive, use the area wave and the predictive fractal pattern as a technical trader, what we practically do, you go to the 3 minute or 5 minute and you look for either the area wave cycle or area wave trend, and you take a picture of it. You don't just take a picture of it and say, well, George, I take a picture of it, so what should I do now? You need to look at the price structure, the retracement, the pattern, okay? How informed? See here, there was a gap here, all right? All these things, you know them down, what has happened in each section of the price. You are not just looking at it, you are trying to dissect it. You want to interpret the language of the price, the language of the predictive fractal pattern. The most importantly, the psychology of those people who participate in the first area wave trend or in the first area wave cycle. So from the 3 minute time frame, that's the earlier stage, we have a cycle that is in place. So that cycle may be the blueprint, all right, or the gene of a bigger cycle that may, repeat, may, does not have to, may take place either on an hourly time frame, daily chart, monthly chart, or yearly chart. You will be amazed how the financial market, in fact, is all about predictive fractal pattern. There is nothing new in the financial market. All you see on your chart has already happened on other time frame, either first on the higher time frame before we see on the lower time frame, or the pattern is taking place on the lower time frame and expanding to the higher time frame. So as an Elliott wave trader, we are looking for the Elliott multi-wave or the Elliott wave cycle on the 3 minute or 5 minute time frame. Anytime we see one, we take a picture of it. So what is happening? Suppose you take a picture of this like this on the 3 minute time frame, you see, oh, George, I have it down. So now we go to the daily chart and we try to see if on a daily chart, for instance, you see a similar pattern like this. He went up like this and went down like this with almost, not exact, but almost the same structure. Maybe a bit of difference. But you see, well, George, what we have noticed on the 3 minute time frame, this is what is happening on the daily chart. So now on the daily chart, you notice that you are here. So what will you focus? You will focus that because of what I've seen on the 3-minute time frame, the part behave like this, we see this cycle did something like this. Now we are seeing exactly the same thing on the daily chart. There is a high chance that on the daily chart, the price will go up first like this, okay, and then it will come down 1, 2, 3 like this, and then it will go up like this, and then it will pull back a bit like this, and then it will go up a little bit like this, and then it will come down a little bit down like this, and then it will go up like this. But because you are an Elliott wave trader, you may say that, all right, my friend, because what we have seen on a 3-minute time frame, all right, it looks to me that, okay, bear with me, it looks to me that the third wave will not be extended. It will be a very, okay, funny, dodgy third wave, but the 5th wave will be quite, okay, volatile, because we see a volatile candlestick bar during the 5th wave on the 3-minute time frame. You will say that, and people will say, how do you know? And you will say that, yes, I was using, okay, the multi-wave or the 3-minute time frame as a predictive fractal pattern. What will be the mistake that one will make? The mistake that one can make in this scenario is to assume that the price will definitely print out exactly what we have seen on the 3-minute time frame. What is the best approach? The best approach is that, all right, if the price, for instance, all right, so you go now on the daily chart, you see that it did that and it did this. Almost same Fibonacci retracement, like on the 3-minute time frame, same structure, or maybe almost or similar, something like that. You see, it look a bit similar. Well, you can position yourself as the price you are expecting. You say, I'm expecting it to go up like this and come like this. Now it did 1, 2. You say, well, that's exactly what I'm expecting. What do you do here? You will use a top-down trading method to buy, because now the price has confirmed your expectation, your prediction, your forecast. Now you want to take advantage of it, but you don't just take advantage of it, getting too excited. You say, well, maybe it's going to do this move now up. Now you apply Fibonacci, okay, extension to this move here, and you say how far it went up on the 3-minute time frame. And you say, all right, it went to the 200% Fibonacci retracement level. So as you are buying here, you are expecting it to stop at the 200% Fibonacci retracement level. After that, you can also forget that again. If it did that, you say, well, now I'm expecting it to do something like this. 1, 2, 3, and to the surprises to all your friends, it did exactly that. So your expectation is being confirmed to a certain degree, and now you, as an Elliott wave trader, using a predictive fractal pattern, you say, well, George said that, do not get too excited, be gentle. The price can go down, it can go up. You implement it, top-down trading method, and you tell your friend that if I enter here and it did exactly what it did, if it's doing exactly what it did on the 3-minute time frame, we are likely to see a fast move up. And here it is, it did it. Sometimes it may not do it, the price may do something else, and you will tell your friend that this is not an exact science, it's a predictive fractal pattern. Try to work with a tool, something, okay, to have a bit of idea what is likely to happen in the financial market. So they will stop laughing at you, saying that, oh, you say that you know the future, and you may say, no, I'm not trying to predict the future. I'm trying to, okay, have a bit of idea what is likely to take place because of what has happened in the past. Am I talking too much? All right. 18 minutes. You get it now? So I will not dwell on it so much, because I changed the title of the video to the first step to a practical use of Elliott wave and predictive fractal pattern. As a technical trader, I will record what I would like to call the second step. All right, so traders do not get too tired. Okay, so the video is not too long, because some traders like short form videos. All right, is your wife telling you not to watch my video? Tell her that if I see her next time, now this to make you laugh a bit. All right, watch all my video in full, please. All right, so you see now, so this is one example how we can use the predictive fractal pattern on a lower time frame, either 3 minutes, okay, or 5 minutes, to forecast what is likely to take place on a higher time frame. It happens sometimes the other way around, where you will see the pattern first on the higher time frame before it happens on the lower time frame. But the key point I want to stress on this tutorial, practical use, it means that either specifically 3 minutes or 5 minute time frame, you are looking for a pattern. I don't use the 1 minute time frame. That's why I don't mention the 1 minute time frame. All right, I don't want to talk about. I don't use 1 minute time frame. All right, either 3 minute or 5 minute time frame. All right, okay. So you are looking for the area wave pattern, the area wave structure. Most importantly, the multi-wave is completed on the 3 minute time frame, or area wave cycle is completed on the 3 minute or 5 minute time frame. Now you go deeper. The structure. What pattern do we have? What's the psychology of the people here? What's going on? As I told you, there are more to this. That's why I don't want to dwell on it so much, and I refer you to other video at the early stage of this video. So there is a process, there is a learning curve to master it, okay? So you may know what to expect, but you want to link either your 3 minutes or 5 minutes to the hourly time frame. Either you may see sometimes that sometimes you go to the hourly time frame, you will see that the pattern is being formed there, or you may not see it at all. Don't worry, it's not there. Don't invent it. Don't get discouraged. Sometimes you'll see exactly there. Sometimes it will not be there at all. So you don't have to worry about it. Or from the 3 minute time frame, you go to the hourly time, it's not there. But on a daily chart, you see that, wow, it's not the hourly time frame. Here it is taking place on the, all right, daily chart. So all you are doing is say, I'm waiting for confirmation. Let me give a confirmation first. So you say the price now here on the daily chart. What I will do, I'll let him go like this and come back like this, then I'll take it from there. Then you see this and this, you say, well, it's confirming my forecast. Now I join in here using a top-down trading method. If it doesn't happen, you are using a top-down trading method to control the risk. If the signal fails, just come out, all right, come out. There will be losing trade. It's not a magic formula or a scientific formula, all right, so you want to handle it carefully. You don't want to lose. Or sometimes you may not see it on the daily chart, and it will take place on the monthly chart. But this process takes some time, long time. That's what I'm saying to you. It's very important to take a snapshot of those cycles on the 3 minute time frame. It's very, very useful for traders that trade one particular financial instrument. There are some traders that trade only indices, Dow Jones and so on. That in that case become easier. So you are trading the same financial instrument all the time, or you are trading gold. All right, some traders trade only gold or crude oil. Those type of traders, this method is very powerful. So they are taking every snapshot. So at the end of the day, they see all this area wave trend, area wave cycle on the 3 minute, 5 minute, they take a snapshot of them. They take a snapshot, they save them on their desktop. So, and then they look back, they check them, and then on the hourly time frame daily chart, they see a pattern being developed. The predictive fractal pattern is now expanding itself on the higher time frame, and they want to use that to forecast the market, to make excellent decisions, to have a bit of idea what is likely to take place. Now, it becomes more work to do. If you are trading many financial instruments all over the place, that can be a problem. For those who are trading currencies, you can just focus, for instance, on the euro dollar, because it's the leading currency pair, and the dollar yen, for instance. And then you are taking those pictures over the year, and you are saving them to have a bit of idea what the currency market is likely to go. And then you are using currency correlation to play this carefully. And you say, all right, the euro dollar, print out this. Now we are seeing the inverted pattern, the inverted motive on the negative correlated currency pair. All right, this is a predictive fractal pattern. And now you use the top-down trading method to trade it. You wait for the price to confirm the first or second bit of your forecast, and then you join it, when it's taking the third part of it. And as always, you learn something new like this, though it looks very easy, my friend, it's not that as straightforward as it is. You need to practice, gain the skill, build the muscle, go to the gyms, so to speak, all right, pump those muscles, all right, so you are fit enough to handle it, okay? Don't drop it like a hot potato and say, Joe, this is all mambo jumbo, you are too fat, you have to, okay, now, just take it one step at a time, work on it, okay? Say that I love this subject and I want to become an expert on it, and then just work on it until you master it. All right, if you have any question or suggestion, put in the comment section, and in due course, I will be recording another tutorial to answer your specific question. If this video has been truly useful to you, please let us know by sticking your beautiful thumbs up. That's very important for us. If you think that, George, there's so much you have to learn yourself, I don't know about you, mark it down, and that will put us under pressure to improve our next recording. If you think that this is an amazing or essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. So this will conclude our discussion today about the first step. I'm changing the title of this video. The first step, okay, to a practical use of Elliott wave and predictive fractal pattern as a technical trader. If you have not yet subscribed to our channel, please do so, and make sure you click on the bell icon, so anytime we record a video, you will be the first person to be notified. All right, and also if you want to support, okay, our work talking about Elliott wave trading and predictive fractal pattern, go to our website and be the first person to put $1 in the box. All right, happy trading to you all, and I will speak to you soon. We are the TSTW24 traders, talking about first step to a practical use of Elliott wave and predictive fractal pattern as a technical trader. Happy trading to you all, and I will speak to you soon.